What is going on with SoFi? The stock is down over 5% at one point today. We're going to be looking at SoFi. We're also going to be taking a look at some existing trades. So go ahead and put those in the chat, as well as some new trading opportunities here today. So let's jump right in and talk about SoFi. Like right now, SoFi is giving it up, my friend. We're looking at a close under the 10 EMA yesterday, which that means the short-term trend is evaporating. Another close under the 10, so two consecutive closes under the 10, and today it's going to close not only underneath the 10 EMA but also underneath the 20 EMA. Now this line right here, we were watching a video this morning, and this particular terrible person on YouTube was talking about how she was going to sell puts at 26 because she loves the idea of owning the stock when it comes to $26. I'll tell you one thing, Joe. If you're staring at a train barreling towards you saying, "Oh man, I can't wait to get run over by the train," that's exactly what people are having happen to them if they're selling puts on SoFi. That's not a position I want to be in. What about you, Joe?
No, it doesn't look good. I'm more of a trade as it's crashing up sort of guy.
Yeah, buy stocks as they're crashing up, not as they're crashing down. They're crashing down for a reason. So jumping over in the OVTLYR platform, right, we can see a sell signal came through on September 25th on SoFi. It's been getting a lot less greedy, a lot more fearful, and everybody in the financial sectors is basically saying the same thing here. We're all going to get way less greedy and start getting a lot more fearful. And in fact, of the companies in this sector, hang on, I got to do a little math right here. There's 140 companies that are fearful, and 252 are greedy. That means there's 392 stocks in the sector. And what you can see how tall this is right here? This is measuring the height of these fear and greed bars. You can see only a handful of them are really tall. They're all really starting to move this direction. Which is what this represents right here. Isn't that cool? This is a single point in time, and this is a average over time. Makes it pretty easy to see that. So for me, SoFi does not look great, but I saw some news that I wanted to look at right here. SoFi faces analyst pressure amid a 250% year-over-year rally. Now, there's something that one of my mentors, Mark Minervini, he calls the 50-80 rule. And SoFi already has worked on the 50-80 rule once. How far down did it go? It went down 52% from right here back in late 2024 to March of 2025. The 50-80 rule is 50% of the time, a stock that moves like this will go down 80%. 80% of the time, a stock that moves like this will go down 50%. It's already done it once. You can't tell me it's not going to do it again, right? A lot of people, especially SoFi bros are like religious zealots, Joe. It's like they all got SoFi tattooed on their foreheads, and they're gonna ride or die. You know, there's only one way that this goes, and it better be to the moon. I don't know. SoFi is not looking so hot to me right now. So let's go watch this video. SoFi faces analyst pressure amid a 200% year-over-year rally.
Welcome back to Next Gen Investing. It's now time to discuss the latest with SoFi, as we do frequently discuss this name for under 30 today. But with an analyst call that's a bit mixed, Morgan Stanley with a price target raise, but keeping an underweight rating on SoFi shares. So now I'd like to welcome in George Tillis, senior markets correspondent for the network, for some more insight on what's driving shares lower today, George. I mean, is it just this analyst call? I know underweight isn't exactly thrilling, but I mean, SoFi has been on a pretty nice run this year, all things considered.
It has, and look, we talked about SoFi for quite a few years, and one of the things we talked about is the underlying businesses struggle from a profitability standpoint. But one of the things I noticed, Jenny, and we actually saw the company break out of a long-term base above the $11 area. This goes back to November of last year. It did pull back and retest that area in April with the market pullback, but since then it's really taken off. And I think if you consider what's happening with SoFi, first off, you want to call it more of a mid-cap, maybe to slightly larger cap company now because it's $33 billion. We know that regional banks and interest rate favorability, smaller cap and mid-cap stocks have done well because of lower interest rates. That's actually helped equity investors in SoFi. But more importantly, I suggest from the move we've seen since November of last year is the profitability profile has improved significantly. That's really underpinning the stock price action. Now, if you look at Morgan Stanley's call, I can see where they're coming from. They do maintain an underweight rating on the stock. $18 now is their price target, above 13, which was previous.
So raising the price target from 13 to 18, which is still $8 below. Man, how far down is that? The price target of 18. That's still 30% down. Joe, if you were a SoFi bro and you saw somebody say that they're going to raise their price target, but it's still 30% below where the price is right now, how would you be feeling?
I'd probably go find a different expert on YouTube to tell me what I want to hear, because I'm a bro, man. It's got to go up.
Do it. It must always go up, right? But they were showing that chart on there. Let's zoom out just a bit. Kind of look like this, right? You want to be buying stocks as they're crashing up. There is no good reason on planet Earth why you would want to be buying a stock as it's crashing down. Here's a perfect example, right? It went up, down, up, down, up, down, right? And let's say you're like, oh, I'm going to buy the dip, right? I'm going to buy the dip right here where that order block was created. That was in December of 2021. Where did it finally get back to break even? July of 2025. So your kid could be a freshman in high school, and then by the time you're back to break even, they're putting on their cap and gown, ready to graduate. That is brutal, right? Your kid could just be born and then about to start kindergarten. Like legitimately, that's how long it would take for you to get back to break even if you decided to buy a stock as it's crashing down. I don't know about you, Joe, but I got other things to do for 4 years. What about you?
Yeah, if only there was an outlier trend template that would tell us when to get out, so we didn't have to hold that bag for that long.
Joe, I love the soft pitch right there. You mean the outlier trend template that anybody can add to their chart 100% for free? Any platform should have the 10-period EMA, the 20-period EMA, and the 50-period EMA. When the 10 is over the 20, price is over the 50, you are in a bullish trend. Now, that doesn't mean that every time it's going to go up like this, but every time it goes up like this, it has to have the 10 over the 20, price over the 50. Let's continue on with this video a little bit longer.
Target. They actually see some concerns, and I can see their point here because, again, you have to consider the lending markets. If interest rates start to fall, especially on the longer term aspects of interest rates, that's going to impact lending, if you will, when it comes down to SoFi's net interest margins.
Okay, so since you brought up interest rates, let's add in the federal funds interest rate here. If I did this correctly, that we should be able to see both of them at the same time. Okay, so from inception of SoFi back at the end of 2020, rates were flat and then they started to push up, right? I would not say that this huge sell-off right here was due to rates going up. No way. In fact, that doesn't really make a lot of sense at all because a financial institution makes more money. The spread that they can keep grows and grows and grows as rates rise. Now, Joe, I'm not just talking out my backside here. I actually worked 12 years in consulting with C-suite level executives specifically on interest rate risk right here. And one of the things that we talked about was making more money and having less risk as rates were rising. So you can't tell me, there is no way on God's green earth that you can tell me that because rates were rising, that was causing the price of the stock to go down. No way, no cotton picking way. And looking at this right here, the opposite would be true, right? SoFi had this giant run right here as rates started to come down. Really? No way. You cannot make that correlation, Joe. Waiting on you, Joe. I was looking for a response there. Joe fell asleep. All right. I'm so boring. He fell asleep. Let's continue on.
But at the same time, volume growth might actually improve for SoFi. But overall, they're out of the weeds when it comes down to the aspects of burning cash, financing losses. And this is what we talked about as a struggling component of the business and why it was really stuck below that $11 area since 2021. Mm-hmm. So it took about 3 years for the stock to break out of that basing pattern. But nonetheless,
bro, Joe, you ready this time? He just said it took 3 years to break out that basing pattern. Good gravy.
Yeah, don't hold bags that long. Get out when those EMAs cross.
It seems to be improving, but I can see if you look at Morgan Stanley's call, just based on the earnings estimates that I have right now for this year, the 32 cents is trading around 88 times this year's earnings. And still around 52 times next year's earnings. So maybe the valuation is still rich. And so maybe the earnings need to now catch up with price, or price needs to kind of reset a little bit lower to accommodate those earnings, which are improving. But the price did actually move quite a bit in the last year, and I think that's maybe that's an overextended price performance that Morgan Stanley's looking at, as well as with their call.
And so we'll abandon the video here, but that's one of the key things that I like to talk about is how unimportant earnings are. Absolutely total garbage. Because legitimately, Joe, this stock has moved crazy amounts, crazy huge movements, yet earnings come out 4 times a year. So the other 99% of the time, it just doesn't do anything. It just like magically moves up and magically moves down. No, let's be realistic here. People are getting more greedy, or people are getting more fearful on the stock. And that's exactly what we're seeing right here. So SoFi, definitely one that if I were holding, I would be taking my profits at this point. I would absolutely be taking my profits at this point. So let's shift gears a little bit, right? And let's talk about the Outlier Trading Room. Welcome to the Outlier Trading Room. This is the invitation only live stream where we help you save time, make money, and start winning with less risk. And if you're watching the replay, go ahead and subscribe if you haven't already. So we're going to go through our plans and we're going to look at existing trades that we have on first. So go ahead and put those in the comments. And then we're going to be taking a look at new trades today. So let me talk about the trades that I have on right now. Don't ever forget, we need to listen to what the market is telling us, okay? And if you want normal returns, this is not the place for you. But if you want outlier returns, you're in the right place. So when to use each of these plans, Plan M and Plan A need to have the full outlier 9 working in their favor. Plan ETF, which is what I'm in right now, let's take a look over at Plan ETF. Let's take a look at Plan ETF. We'll come back to Plans A and M in just a little bit. We need to see an uptrend in QQQ. We need to see a buy signal on QQQ. And we need to see the QQQ heat map under 70. Now, these are the entry points that you want to be looking for. So let's go to QQQ. And we also want to make sure that it is within the outlier value zone. Now, the value zone, let me scroll a little bit more. So much scrolling I have to do right here, Joe. Here we go. The outlier value zone. This area is 2 ATRs above the 20 EMA. Now, listen, if you don't have this on your charts just yet, no worries. Go into TradingView and type in outlier, OVTLYR, value, and boom, it's going to be right there. Outlier value zone. Add it to your favorites, and then you'll always have it. What we're trying to do right here is make sure that we get into the plan without it being overextended. So I got into Qs on September 24th, and I'm going to continue to ride it. I'm trading it via the vehicle of tqqq. So all we got to do right now, Joe, is take a look at our exit signals. And these exit signals are way too simple. First, a sell signal on the Qs. We don't have just yet. We might soon. I noticed that we're getting more fear coming in the market, Joe. I was actually taking a look at this just a little bit ago. And I was like, I wonder where the peak comes and then how many points it peels off before a sell signal comes. So from here, the peak greed was at 74.94. And then the sell signal came when it was down at 72.96. So about 2 points difference. The peak here was at 75.38. And then this one here was about 1.5 points difference. So this peak at 69, we're down at 68.20. I don't know, man. I'm thinking we might see a sell signal here in the next couple of days on the Qs. What do you think?
Yeah, we certainly could. It's nice to see it dropping below 70.
Yeah, for sure. So, and the reason that Joe says nice to see it dropping below 70 is kind of like our upper threshold limit for getting into trades. And so we want to see that fear and greed kind of abate a little bit. When everybody's greedy, Joe, what's left?
Yeah, well, everybody's greedy, meaning they want the stock, right? So that means there's only sellers waiting at the table to wave their flag.
That's what I was looking for. If everybody's already greedy, all those greedy people are going to turn into sellers and they're going to get fearful. And yeah, so what am I looking at right here? No sell signal, a 1020 cross on the EMAs, not even close. And a 30-day or older order block is hit. It's in an order block right here, but it's like 6 days old right now. So one like that you can just ignore. So nothing to do on the Qs. So I'm going to continue to hold Plan ETF. Now let's take a look over at Plan M and Plan A. Plan M and Plan A, we want to have the full outlier 9. Everything in the light gray right there is the outlier 9. So let's start at the top with the SPY having a bullish trend. And while we go through this, put your stocks in the chat that you own right now. And we'll take a look at some of those. I want to give you some perspective on, I'll give you a professional trader's look at those stocks. So looking at here, we have a buy signal still remaining on the SPY. Now, a little bit different here, right? That buy signal came when it was 77, and it's been leaking out for a minute. The greed has been leaking out for a minute. Now we're down at 70. So it seems like the fear and greed signals move a little bit differently, even from one stock to the next. Next, the signal is a buy. The trend is still bullish, but the breadth is not looking so hot. So pulling up into market breadth, what we see right here is it continues to move down and down and down. More and more sell signals coming. Now, Joe, we might be hitting a bottom. We might be hitting a bottom because we just might be maxing out the number of sell signals there are. We're down at 24% of the market having sell signals. What I want to see right here is a number of stocks with 1,780 sell signals versus 565 buy signals. That's not a great start. That's not a great start. We want everything working in our favor, Joe. We want all of the momentum coming to help us out. So plan A and plan M both use this filter for the market. And because of that, I won't be putting on any new trades today, but we will be running the scanner and maybe taking a look at a few that you put in the chat. So at this point, I want to go to you. I want to go to see what you are trading these days. So we already talked about SoFi long at 29.17. If you're still holding SoFi at this point, it is absolutely time to get out. It is absolutely time to get out. We've got the sell signal. We've got closes under the moving averages. Like I can't see any reason to hold on to SoFi at this point. Let's go to Buckmasters. He is long JPM at 301. So JPM is also in the financial sector, but a different story right here, Joe, wouldn't you say?
It is a different story. Unfortunately, I was reading comments.
Joe, count on you. I need somebody to throw to every once in a while.
I've got a big job here, man.
You do have a big job that you don't get paid to do for either.
That's right.
Joe, what is your initial view when you're looking at JP Morgan?
Well, let's see. You've got it here on the screen. I notice we've got some green background, so it's trending up. Then I'm going to look over in the middle of the screen towards the right there, and I'm looking to see if it has a buy signal, and certainly it does. Then I'm going to look to see if fear and greed is going up or if it's going down. If it's going down, I know I'm probably not interested in it. Mm-hmm. Constituents, I'll take a look at that, see which way that's ramping. But in summary, if you don't want to get that deep on these, you just look in the top right and you look for the green boxes and the red boxes. If they're all green, you're in pretty good shape. If they're all red, it is not something you want to be in.
For sure. I'm seeing another bug coming through over here. So let's refresh on JP Morgan. There it goes. Now it's looking better. Okay. Because I was like, wait a minute. It's got a bullish trend. Why? I don't know. Clearly that was not looking right, but we refreshed it. It's fixed itself. So buy signal came through here. Looking strong, big, beautiful trend going on. The fear and greed on the stock itself is pushing up higher, where the fear and greed and the breadth on the sector, not looking so good. Not looking so good. What's going on at JP Morgan these days? Why is it looking so good? Spotify price hike. Oh, they were making an announcement. I see. Kramer's banking list. Why JP Morgan and Goldman still look cheap. Oh, geez. Startup founder. Oh, did you hear about this? Charlie Javis. Do you remember Theranos, that Theranos girl who had the crazy eyes, blonde hair, and like said that she could like do all the blood testing with one drop? Mm-hmm. Charlie Javis did something like that in the financial space. She created an app with all these fake names, like literally fake names. And she sold the app to JP Morgan for like hundreds of millions of dollars. And she just got sentenced to years in jail today. Maybe that's why the stock is pushing up so much higher. But yeah. This stock actually looks pretty darn good. So if you know where you're going to get out, that's the most important there, Buck. Let's go to another one here. Arnand, UEC. I own the stock and he bought it at 1401. All right, let's go to UEC. By the way, the platform that we're looking at right now is called OVTLYR. You can grab an annual pass to OVTLYR for just 82 cents a day, if you can believe that. Now, let's take a look at UEC. This is in the energy sector. This one actually looks really good. Take a look at it, right? We've got the stocks fear and greed is ever so slightly down. And then the market breadth, I mean, it's so slightly down. It went from 75.95 to 75.94. I mean, practically flat. And other than that itsy bitsy 1 basis point move on the fear and greed, And the market breadth, this is actually looking strong. Look at the sector, right? The sector is pushing up really greedy. You can look at the individual stocks inside the sector, how greedy they're getting. And then the buy signals are still coming through with the new buy signal today on UEC. Arnand is long from 1401. Let's go look at UEC. So, okay, so it's got a little pullback since Arnand got in, and that's all right. That's part of the game, my friend. Just be sure you know where you're going to get out. Set that stop loss at a level that you're comfortable with, and position size at a level that you're comfortable with, right? If we see a close under the 10 and certainly a close under the 20, I would definitely be making sure that I had a plan in place to get out with a minimal amount of loss. So Arnand, not a bad stock here, not a bad stock. Let's take a look at Pat Greeny. Short Dell. All right, talking about short trades. First, Pat, I got to tell you, the very last thing that I would do ever is short in a bullish market. It is so hard. It is very, very, very difficult to try and tell a train that's speeding down the tracks to stand on the tracks and say, no, 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 no. You need to go the other way. It is so, so hard. I have lost a buttload of money trying to do exactly that. What about you, Joe? You ever tried to shorten a bull market?
I never have shorted. I guess the only thing I've ever shorted is in futures. So yeah, I've never lost to that gamble.
Oh, I mean, futures are like the most leveraged product you can do. That's, you got some big cojones to do that.
Well, I don't do it anymore.
Oh. Well, Dell does have a sell signal, so that's working in your favor there. Who is that? Pat. Dell does have the sell signal, so that's working in your favor. The tech sector moving down on greed, moving down on breadth. The stock itself moving down on greed as well, pushing towards fear. But you've got some big headwinds here, and this is actually why I really like going through the stocks and you guys telling me where you got it in from, right? So it's a great day to skip work, he says. Well, right now you're looking at a couple order blocks that are going to help your case, right? Since he's trying to go short, he wants to go short. He says he got in at I assume that this means he got in short at 136. If I'm reading that correctly, which is not great. It's working against you pretty hard. However, you do have a big order block ahead, but you're in a bullish trend. You're in a bullish market and a stock with a bullish trend. It's going to be really tough to make money on this one, Pat. Going to be really, really tough to make money on this one. But this is great. I love it. I love hearing from you guys. We forgot about SGov. Let's talk about SGov real quick. So SGov is our vehicle for what we are calling Plan ETF. I'm sorry, Plan Sit in Cash and Don't F up. Now, what's really cool about SGov is that it is a way for you to earn interest in your account when I say sit in cash and don't F up your portfolio, which is one of the hardest things to do, Joe. But SGov, I only recently learned about it in May, and I'm really frustrated that you didn't tell me about it sooner. Why didn't you tell me about this sooner, Joe?
I didn't meet Dave till May.
But anyway, SGov is a ultra short-term bond equity. I guess you could say fund. It's not an equity, but it's an ultra short-term bond ETF that you can buy. And by doing so, it will allow you to capture daily gains in your account. Now, you'll notice here how it moves up, moves down, moves up, moves down, moves up, moves down. This is the interest being paid into your account on a daily basis. And then at the end of the month, they have a dividend, and the dividend is equivalent to how much it went up during that month. That's why it looks like this, right? I know it looks weird, but once you understand how dividends work in the market, it makes total sense. So if you are in SGov, today would be the day that I would sell. Now, why would I sell SGov? Wait in SGov until something new sets up, right? Sell SGov like now-ish. Yes, exactly. I look to roll over, in quotes, SGov. So I would sell all holdings of SGov on the last calendar trading day of the month, which is today. And then on the first calendar trading day of the month, repurchase however many that I can. Now, why would I do that? First, it eliminates any potential market risk because I know it sounds crazy, but there is a slight bit of market risk here. Now, if we zoom out, you can see how it moved up over time. Okay. There's a possibility of it moving down over time. So if we sell on the last day of the month, which we can see when that happens, then we eliminate any market risk that comes along with it. Next, by doing that, selling at the top right there, you can have more SGov to buy right away. So that means tomorrow, once it collapses back down, once it crashes all the way back down, Joe, you can buy more SGov right away instead of waiting 5 to 7 days for that dividend to come into your account and then buying more of it. So it's a nice hack. Thanks to Dave, one of our Outlier University graduates, for putting that together. And that is what I would be doing if I were in plan sit in cash and don't F up. And so now what I want to do is run the screener and see if there's any new trade ideas coming through. Of course, like I said, I won't be putting on any new trades today, but that doesn't mean that there's not something new out there for you. All kinds of new opportunities all the time. So even though it doesn't fit my plan, in the chat, go ahead and put a hashtag in for any new trade opportunities, new trade ideas that you're looking at. Like Steven, today, long CMS with a $70 call. Okay, let's take a look at CMS real quick. Let's go look at CMS. All right, CMS is in the utility sector. So he's off to a good start there. And in fact, let me pop over back into market breadth, because the utility sector was one of the sectors that was crossed bullishly right here. So you're on the right foot right there, Stephen. So buy signal came through today. It looks like it has a big, ugly, nasty order block right on top of it, though. It's getting more and more greedy. The sector is getting more and more buy signals, and the stock itself is getting more greedy. So you've got a lot working in your favor, except for the breadth of the market and the outlier block that's sitting right ahead of it. But overall, I mean, not a bad stock. Just know that that overhead resistance could prove to be a headache. Could prove to be a headache for sure. Let's run the screener and see what pulls through here today. So a couple names that you'd be familiar with, like Datadog. Joe, do you remember when we traded Datadog in May?
I do, and we made a bunch of money on that. That was nice.
We made a ton of money on Datadog. I wonder if my notes are still on this. Oh, they are. Yeah. This was one of the best trades I've had in a long, long, long time. 106.79% in 4 days. We bought it on May 9th, sold it right here at the top on May 25th. Now, Plan M would have had us in a absolutely different exit signal, and it looks like I left a couple dollars on the table there, Joe. Just saying. Thanks to Plan M, though, that shouldn't happen again. That shouldn't happen again.
We'll catch it next time.
We'll catch it next time. I'm not worried about that. But looking at Datadog today, let's look at it right now. Buy signal does have a little order block that's showing up on here. Is it showing up out here? Yeah, right there. That order block right there. Be aware of that if you're going long on Datadog. Around 146.75, you're going to have some overhead resistance. What else? Buy signal. The stock's getting more greedy. The tech sector, though, we've talked about this a couple times already, getting less greedy and having bearish breadth. So not a bad start. Not a bad start right here, but certainly it's got some headwinds that we might run into. What about you guys in the chat? What new stocks are you looking at? Put a hashtag in with the stock that you are looking at for something new. Let's see. I'm scrolling through the chat looking for something. Mr. Launchpad McQuack, who's going from fat to jacked in 2026. He will win the fat to jack championship in 2026. I love it. He is looking at Nvidia long, which, did I see Nvidia over here? I did. Nvidia got a buy signal about a week ago, September 23rd. Let's pop into that one. Let's pop into that one. Oh, Cody's also looking at Nvidia. I like it. I like it. All right, looking at Nvidia, it's sitting on a buy signal in a bullish uptrend. The tech sector, not helping you out. We've already discussed that. But the stock itself, it lit up pretty good. It lit up pretty good right here. You've got 6 of 9. Let's go to Nvidia chart. And yeah, pushing to new highs right here. That's what you want to see. Joe, why do we want to see new all-time highs on any stock?
It means there's nobody holding the bag. There's nobody up there ready to sell. Everyone is making money at all-time highs.
That's right.
Well,
all-time highs are bullish.
Unless you're selling short, right? Which I don't know why you would do that.
Unless you're an idiot selling calls against it, which I've done, which is why I never want anybody to ever sell any options ever. And you know what? If you are one of those idiots selling calls against it, I've given you fair warning. Don't do that. Don't do it, because it breaks the golden rule of leverage. And new all-time highs is bullish AF. Bullish AF. You can't ever get to new all-time highs. You can't ever have big trends like this unless you're making new all-time highs all the way up. And people get so scared to death on that. Not me, man. New all-time highs is beautiful. That's what you want to see. And what else was beautiful? This right here on the stock, all green, but your sector and your market are not quite there. Let's do a couple more. Gabor Pop wants to look at SMCI long, also in the tech sector. SMCI long. Ooh, SMCI's got some headaches I can see up ahead. But let's take a look at the dashboard over here. So just like Nvidia, it started a bullish trend. It's got a buy signal. Fear and greed's rising, and the outlier blocks. It does show one right here. That one right there. It looks like it ended in trading view. So just be aware of that one. But the sector is not going to help you out at all right here. So SMCI, it definitely has room. It's got about 16%. So you know what? If that's on your radar, you've definitely got room to make some money on this. What do you think, Joe?
Yeah, I mean, as long as you got some overhead before you hit that block, you could be good. Just follow your plan, and you're probably going to have an exit signal of when you get to that order block you're going to sell. But yeah, you got some room.
Yeah, you definitely got some room. Now, the thing is that whenever you are looking to put on a trade, you need to make sure that you have your exit plan in place before starting the trade. Now, it sounds super cliche. Know exactly where you're going to get out before you get in. Well, how do I know exactly where I'm going to get out? You look for those exit signals, be it a crossover, be it a sell into strength point, be it a stop loss, right? You need to have a plan to get out at your exit signal. And in the meantime, don't touch it. Now, if you're looking to save time, make money, and start winning with less risk, over at OVTLYR.com, you can pick up the annual pass for just 82 cents a day. That's 64% off the regular monthly price, and you can get access to the entire OVTLYR platform. And listen, we just showed you several new opportunities right here. And if you take some of them, you need to make sure you get your exit signals. And the best way to do that is by grabbing the OVTLYR annual pass for just 82 cents a day. Joe, thanks so much for hanging out with me today, man. I think we covered a ton. I feel like we delivered a little bit of value in this video. Do you think it was all right?
We definitely did. We definitely did. This was a good video. Yep.
Yeah.
I think it's a good time to hold on to some money, because right when SPY drops below 70, it's going to start going back up eventually. We're going to have a ton of entries in Plan M. It's going to be good to have money available to make those trades. So,
on that topic, Joe, if we go over to SPY, which we need to see under 70 on the fear and greed heat map, we are at 70.38. But keep in mind, on market breadth, we're getting so far down, all these sell signals coming through. I wouldn't be surprised to see I'm not calling for a crash, but I wouldn't be surprised to see a big retraction in the amount of greed that we see. And then all the new buy signals are going to come through, and it's going to be glorious, like it was, looks like late June right here. A huge run where the market's pushing up higher, where the fear and greed is growing, all the sector fear and greeds are growing, all the breadth is growing. That's when trading becomes one of my favorite words to describe trading. What would that be, Joe?
Effortless.
That's how trading should feel. It should feel effortless, where you just put money in and you get money out. It's just like an ATM.
Yep. Yeah, at this point, I'm just looking for exit signals on Plan ETF, and when those come, I'll be in SGov, and then it's all going to shift. We're going to have an abundance of stocks to pick from, and lots of option contracts to be looking through.
I agree. Now, we got to wait as long as it takes until that happens, Joe. But if somebody in the meantime, we're looking to save time, make money, start winning with less risk, where do you think they should click?
So maybe over here.
Little finger dance action going on. Yep. One there, one here. That you should totally click on one of those, and have a fantastic day. We'll talk soon.